Hello everybody, welcome to weekly market news. My name is Stepan, and stock markets around the world last week declined again, dragged down by technological stocks and also by FOMC. As we are looking at right now, S&P 500 chart, we can see the beginning of the week was looking quite positive. We were erasing the losses from a week earlier, but as the FOMC meeting has been scheduled for Wednesday, showed that FOMC wants to keep the rates low until 2023, but has not signaled any additional monetary stimulus that might be coming on the way. So that was quite disappointing for investors that were expecting more stimulus into the economy, as the fiscal stimulus from U.S. government is not on its way. It was promised to be on place around beginning of September, but it didn't come. So we're still waiting for a fiscal stimulus. The monetary stimulus is still going quite strong with QE, with low rates, with basically low negative rates. So this is quite positive for the markets. It should stay positive, but as you can see right now, the momentum is quite changing, because at the stock market, especially at the beginning of the week, we can look at the DAX chart. This is 4-hour chart of DAX. We can see the consolidation has been broke today morning, and the overall quite wider consolidation is still on place. So the market is not looking as good as it looked, I don't know, let's say beginning of the summer. It's looking quite negative. There is a lot of speculation about the lockdown, because in Europe the cases are still surging, especially in Czech Republic, which is the country that is being hit the most, and obviously some countries like Slovakia. And the trend is moving the direction that the lockdowns might appear, and also the boundaries might be closed, which also could affect the business, could affect the demand for oil, could affect the overall economy recovery. So this is quite bad news for the market, for the economy. You can see the markets react appropriate. So you can see another steep decline at the beginning of the week for futures in US and also for stocks in Europe. So we'll see how this all will play out. Obviously, last week for S&P 500, NASDAQ, and US stock indices was the third week in negative territory, which is the third week. It's just basically the most declined we have seen in the market since the big sell-off in March. So we'll see how it all will play out, but you can see right now the tech stocks, the valuation in the tech stocks, and basically the pricing is super high. There is some expiration of options. We will see how this will affect the market, but overall it's not looking good from basically on a technical standpoint. From fundamental, we still see quite big monetary and fiscal stimulus that should support the market, and should basically just limit the downfall that we might see. You can see also here 200, 100, 200 and 100 moving averages that might stop the market, might also work like a technical resistance, technical support for the market. You can also see some consolidation around the price 3,253, where the market could stop and also could bounce back up. But the valuation at the tech stocks are quite big, and Apple, Amazon, Facebook has been dragged down quite heavily. So we'll see how this will affect the overall market sentiment, but it's turning quite bad then it should be turning good again. So we'll see how this will play out. So this is the current situation at the stock market. If you look at the Forex, you can see Euro also at the beginning of the week is being dragged down by by the worries about the lockdown, about the economy, economy recovery, which might not be as fast as predicted previously. This is the second wave of coronavirus. Everybody was expecting that, but you can see the market is reacting right now. Also, the FOMC and their signaling of average inflation, which should keep rates low. First of all, it helped the US dollar, but then the euro, has proved its relative strength in the recent weeks. It's still around the price 118 right now. It declined below 118, but you can see from longer time frame that the weakening dollar has surged euro to the levels that is right now. You can see consolidation. So right now the market is basically just repeating what it has done in June, where you could see the consolidation right here, then rise again, consolidation, and we will see what the markets will do in coming weeks. But as we are looking at the thing, what is all happening in Europe about the coronavirus, we also might see some new fresh stimulus from ECB until the end of this year, which could possibly help the euro, because it's quite risky currency, so it might help him to get some profits on this. So we can see consolidation right now. We'll see if the euro will break it below let's say 117, which would signal downtrend on Euro USD, but also it could break up this 4-hour declining trend line, which could also be broken, and the market might be moving up again. If we look at another Forex, so let's say GBPUSD, it has bounced from this strong resistance area. You can see right here the pivot high, also the consolidation right here. It has reacted, but also again a technical. I'm gonna draw right here a technical resistance here, which the market has bounced from, and it's keep declining again. The fundament on GBP is not as good, as the Brexit has the question about the Brexit has not been solved yet, and it doesn't even look like it is going to be solved anytime soon. So the time is taking for Britain, for UK, for EU to get some sort of deal to get this all done, but the market is reacting, I think, appropriately to the market news. So GBP is declining again, and I think we could very soon see the break of this local low that has been created at the beginning of the September. So this is the situation on GBPUSD, and if we look at the oil, crude oil, WTI, we can see that we broke this huge consolidation. We can see two big steep losses back to back weekly, where we even touched $36 a barrel, which is the lowest since beginning of June. And obviously the demands for the concerns about the demand, also Saudi Arabia, OPEC, and some countries, they cheated the quotas that has been set by the OPEC at the beginning of the production cuts. So this is something that has dragged down the markets, and right now actually last week the oil was able to bounce back, which was the confluence of breaking this symmetric triangle, and also some news from Saudi Arabia, which is very keen and determined to balance the market, even push the cuts a little deeper, which could support the market enough. I mean, should support the market enough to stay around, let's say, $40 a barrel. I wouldn't expect any any big rally here, because you know, the market has a lot of concerns in the coming weeks. We have seen what the concerns about the lockdown has done to stock markets in the beginning of the week, and this is something that affects hugely the market with oil. So the best case scenario for oil is basically continuing the consolidation here around the $40 a barrel. It might go up a little bit, 42, let's say even down to 36, but I wouldn't really expect any big moves. Let's say uptrend here. It really does not have the fundamentals to support some steep rise, let's say. So this is the crude oil, and let's look at the economic calendar, what we expect this week. Today, we have a speech of Christine Lagarde from ECB. For the rest of the day, it should be quite quiet. On Tuesday, we have some data from US housing market, which could be quite interesting. Also, testimony of Jeremy Powell from Fed. As we look at the Wednesday, we have a decision of New Zealand Central Bank. We'll see how they will move on with rates. Also, they might move on with the QE. We'll see how the economy is, how the recovery of the economy is going. For the rest of the day, we have a bunch of PMIs from Eurozone. So this is something that, you know, might show us how the managers expect the recovery to take, how long it would take, and how fast the recovery might be. So that's Wednesday. Also, another testimony from Jeremy Powell. We have oil stocks change from in United States. Also, distillates and gasoline stocks change. So this is something that will show us where is currently the market, the oil market in the US. And as we move to Thursday, we have EU summit all day on Thursday, so there might be some volatility on euro and on European markets. Also, another series of economic news from Eurozone, as in Germany there will be data from IFO Business Climate Index. And for the rest of the day, we have also another series of sales, new home sales. So homes market in the United States, also another testimony from Jeremy Powell. And Friday, another day where the summit will keep going from Thursday. And for the rest of the day, we have core durable good orders from US, and the rest of the day just the secondary data, which did not affect the market as much. So this market should be, this week should be much more quiet on the markets. As we had FOMC last week, we have some speeches of some very important people, so we look ahead for that. We'll see how this will play out at the markets, how this will affect the markets. So this is all for today, the economic news, the look at the markets. If you have some comment or questions, leave it below the video, and I'll see you till next time.